Stock markets have erased all pandemic blues and are back at pre-COVID levels. Let's do a 3-point analysis to find out where is the Nifty headed and what should be investors' strategy now. 1. Market hits near 9-month highs. Well, the Sensex has surged over 700 points on November 5th to close above the 41,000 mark. Also, and that's across all the board buying amidst the strong trend in the global markets that were seen yesterday. Also, Nifty50 rose over 200 points to end the day at 12,120, and this is the first time that the Nifty has also closed above 12,000, and that's after February 20th. The Nifty had closed at 12,035 on January 30th when India witnessed the first case of COVID-19. The Nifty also crashed to 7,511 on March 23rd, and since then it has now rebounded 61%, wiping out all the losses that were triggered by COVID-19. 2. What are the key factors behind the rally? Well, Indian equities rose in sync with the gains seen in the major global peers, and that was right ahead of the US election results. Now, as per Reuters, investors who met the news of likely gridlock in Washington with a large-scale unwinding of bets on a Democratic sweep weighed prospects for big stimulus measures, while also cheering the fading expectations of higher taxes and even new regulations. Back home, some IT and bank heavyweights also rallied, pulling the markets quite higher from this level. Also, the investors took note of the improving macro scenario back home in the country. Activity in India's dominant services industry also expanded for the first time in 8 months in the month of October, as the demand also surged. The Nikkei IHS Market Services PMI index also climbed to 54.1 in October. And also, foreign portfolio investors have been net buyers so far since October, which also has pushed the indices higher from before. 3. Will the rally sustain? Well, that's a big question. Analysts have already coined the term K-shaped recovery to describe the market's trajectory so far. Also, the sectors that have seen uptrend are healthcare and information technology. And Nagaraj Shetty, who is the technical research analyst at HDFC Securities, he has said that the next important resistances for Nifty will be placed at 12,250 and 12,430 levels, which could actually offer key resistance for the market, and that's on the higher side. However, the short-term trend of the Nifty continues to be quite positive, and one may expect further upside in the market for the short term. Gaurav Ratnapakki, who is the senior technical analyst at Sharekhan by BNP Paribas, has said that along with the price breakout, the daily momentum indicator has also started a new upcycle on the upside for the Nifty. Now, while the index is almost back to the pre-COVID highs, the stock prices for over half of its components are still below February 20th levels, and that's something investors should keep a note of. Therefore, most analysts suggest that investors must maintain a positive yet cautious approach and continue with the stock-specific trading approach going forward.